All right, guys. So we've been working on taxes, kind of all the little bits and pieces of everything. Today we're going to actually look at filing taxes. So again, how many of you have already filed your taxes for this year? And then how many of you still need to file your taxes? A couple of you? Okay. So we're going to go through, last year taxes were very different, very different. They changed a lot of tax laws. So I had to completely redo this section. Like, it took a very long time for me to go through and try to learn all the ins and outs as much as I could for all the changes. So if there's something you ask and I don't know, I will go look it up tonight. So just to let you know, they changed everything. I'm trying my best to try to catch back up on all the changes that were made. Okay. There used to be a 1040A, a 1040 easy, and a 1040 long form. So there were 3 forms of different types of ways to file. Now everything's just a 1040, just as simple as that. They say they made it simpler. I don't feel they did, just so you know. Most people won't itemize, and we'll talk about that in a minute anymore, like I used to, but this year with the way they changed the tax laws, we didn't have to. But like, to go through the form, it looks very simple. Like, it fits seriously on a half-page front, back. Like, that's how it fits when you actually file them. But if you do anything other than the most straightforward thing, which for most of you guys, you'd be probably pretty straightforward at this age, like, there are so many different schedules, like Schedule A, B, C, D, Schedule 1, 2, 3, 4, and like all these different forms, that it's not that simple, really. Okay? For you guys, it will be, but if you did anything other than just like basic, like, here's what I made, here's my taxes, like, it is not simple anymore. All right. So your employer will hold taxes from your paychecks to pay your federal, your state, and your local taxes, which I'm sure you see that, right? Every paycheck, you're like, holy crap, they took out how much this time? Right? And we've looked at that already. By the end of January, you should receive a W-2 from your employer. So typically they say by January 30th or 31st, you should have all your tax stuff. I'll be honest, there's times I've gotten things into February, but they should have them to you by the end of January. But the W-2 tells you how much money you've made and then how much they withheld, how much has been paid into the different taxes. Okay, so you need to have that in order to file your taxes. All right, so how do you know if you actually need to file a tax return? Because there are some people that do not have to file them. What? Oh, sorry. I forget about that. They look pretty green though, don't they? Sorry. You can write above them or below them. Sorry. So whether or not you must pay taxes depends on whether your earned, unearned, or combination of income exceeds certain limits. Okay, so earned income is money you make from a job. Yes. Obviously, it is earned income. You earn that money. All right. Unearned income is money from interest or dividends from investments. Where do you typically earn interest? No one knows where you earn interest? A bank. Yeah, if you have a savings account, you earn interest on that. Now, granted, if you're like most people and you're like, yeah, I got $100 in my savings account, you're probably not going to make a lot of interest for the year. But if you have quite a bit of money in savings and stocks and all that kind of stuff, you're going to earn interest. Dividends is coming from your stocks. Now, we haven't talked about the stock market yet, but we will. But that's from different stocks and the money that you make from your stocks. If your earned income is more than $12,000 and you are under 65 years old, you must pay taxes and you must file a tax return. So for those of you that don't make more than $12,000, technically you don't have to file a tax return. Should you still? Yes, you should. You don't have to. They won't come after you if you don't. If your earned income is less than $12,000, you most likely do not pay taxes, but you should file a tax return to get your refund because they're still withholding those. So if you make less than $12,000, technically you don't have to file it, but if you want your money back, then you're going to want to make sure you file. Okay, now that value has changed from last year. Last year it was like 6,000 something, but when they changed all of the, like, 12,000 is your deduction that you get for being a single person. Okay, so if you make less than 12,000, technically you don't have to file, but you don't have to pay taxes either. So anything you paid in, you should get all of it back. Neil? Yeah. If you made less than 12,000, you should get it all back. What do you mean they took 14? You should still get that $14 back. If you don't make over 12,000, you will get it all back. Have you filed yet? Now, did you work 2 different jobs that combined made over 12,000? Okay, then yeah, you should get it all back. You shouldn't pay anything in. Who did your taxes? Yeah, here's the problem. Yeah, you should get it all back. If you're under 12,000, you should get it all back. And we'll look at filing some today so you can kind of see the forms and what it should look like, so you can kind of play around with that. Okay. If you want to bring it in so I can see it, I can look over it for you. Okay. All right, so why do you need to file a return? So you file a tax return to see whether you owe the IRS money because you did not pay what was required. So that happens typically like when you claim 0, like when you fill out that W-4 when you first get a job. Depending on how you claim, like Neal City claims 0, they're going to take more out of your check the lower the number you claim. So like me, we're a family of 5. If I would claim 5, they would hardly take any taxes out of my check, but I would owe at the end of the year. So like I think I claim 1, so a little bit of something. So they take a lot out so that way I can still make sure I get a return. I do not want to owe at the end of the year. That would be terrible. You also want to see if you get a refund from the IRS because you paid more than was required, which is what I think a lot of people do. They end up paying way more than they have to. And the way they change the tax laws, a lot of people, I think, are getting bigger tax returns than they have in the past. And for us, I'm getting back $1,300 less. I was not happy when I did my taxes. And I'll explain to you why as we kind of go through this. All right, so what are you supposed to file? So everyone files the same basic Internal Revenue Service tax return called a Form 1040. And again, there used to be 1040A, 1040 Easy, the 1040 long form, like there was all these different options. Now, everybody just does a 1040. But of course, the more different things you have, the different schedules and forms and everything else that gets attached to that. So additional forms called schedules may have to be filled out for unique situations or to itemize. For example, you'll use Schedule 1 if you have additional income like unemployment compensation, prize or award money, bless you, or gambling winnings. Thank you. If you have deductions such as student loan interest, which that is something that like I had to use Schedule 1 when I did ours because my husband and I both have student loans that we pay. Self-employment tax or educator expenses. Again, my husband and I are both teachers, so we had educator expenses as well. So for us, we had to file using Schedule A. Also to note, though, on all of these forms, the IRS allows the taxpayer to round monetary entries to the nearest dollar. So anytime you are filling out a 1040, and we will do numerous of them today and tomorrow, every form that you fill out for me, there should be no change on it. None. Okay? Round to the nearest dollar. So what if I had like the change was 50 cents? Would you round up to the nearest dollar or round it back down? You round up. Okay, if it was 49 cents, you'd round it down. Okay, so just so you know, on those forms, no change. Okay, they allow you to round everything to the nearest dollar. It makes your computations a lot easier. All right, things you need to know. So you have to fill out your name, your address, your social security number, and your filing status, which we've talked about filing status, right? You must also supply information about family members that you support financially. So a dependent is a person reported on a taxpayer's income tax form that a taxpayer supports financially. So for me, I have 3 dependents, right? I have 3 kids. I support all 3 of them. And then filing status, we've already talked about this. You're single, married, filing jointly, married, filing separately, or head of household. What makes you head of household? You know? Did he know what head of household was? But you don't remember? You don't know. Head of household, and we're gonna, all the things that I give you guys when I'm asking you to do 1040s, which tomorrow we're gonna do like all practice all day tomorrow is all like, here's 1040s, here's like file these taxes for these people. We're gonna get a lot of practice tomorrow. But I'm not gonna tell you how they're filing. You're gonna have to read the scenario and who they are and determine how they file. Head of household, you guys may want to make a note of this on your papers. Head of household is when you are single, but you have dependents. Single mom, single dad, you got kids. That's head of household. Because single implies that it's just you. Okay? Head of household implies I'm single, meaning I'm not married, but I still have kids or parents or somebody that I support financially, but they're dependent on me. Okay? So like the biggest example for me is single moms or single dads. Okay? That's head of household. Reason being is you are allowed to, it's a tax deduction, and I'll show you those values here in a minute, but head of household, they get a bigger tax deduction than if you're just single. If you're just a single person, you subtract less versus head of household. Married filing jointly, you get to subtract even more off of your income. All right, so things you need to know. Taxable income, right? We have earned income, we have unearned income, and then we have taxable income. Taxable income is the difference between your adjusted gross income and your deductions. So this is the number you will look up in the tax booklet to determine your tax. So on the forms, the 1040 forms, it will tell you like using your taxable income, what is your tax? That is the number, which now we'll see this, we'll go through the forms. But like you have how much you made for the year, like your gross income, but then you have deductions that you can take off of that. Whether you're single, married, filing jointly, head of household, like it determines how much gets taken off of your income. All right, so you filled the whole thing out, you got it all filed, ready to go, and then what do you do with it? Okay, you fill out your form, you have to sign it and you have to date it for it to be accepted. Most people do them online anymore. If you do them online, you can do an electronic signature type thing. But once your tax return is complete, you have to file your return. You have to return it to the IRS by, do you guys know the date? Yep, April 15th. You can do this electronically or by mail. Most people do them electronically anymore, just because this is kind of the era that we live in. We do everything online, which is really nice because like when I filed mine, like within a couple hours, I had gotten notice that it was accepted by the government. Like they'll let you know pretty quick whether it's accepted or rejected, or if they have questions, or they're going to audit you, or something like that. And then if you do like the auto direct deposit into your bank account, like I got my tax return money within almost less than 2 weeks, I think, and I got my tax returns, which is direct deposited right into my account. All right, so number 1, we'll just do a couple story problems, kind of get your feet wet before we kind of actually jump into doing an actual return. So Avery's employer withheld $21,639.90 in federal income tax. After completing her return, Avery has determined that her tax is $23,984.32. Will Avery get a refund, or does she owe the IRS, and how much? Why'd you say she owes? Good. I mean, it should be that simple, right? Her employer kept out over $21,000, but the government says she's going to have to owe $23,000. So they didn't keep out enough. All right? So she's going to owe, how much will she owe? How do you figure out how much she owes? You just need to subtract them, guys. It's not rocket science. So $23,984.32. And we'll just subtract off the $21,639.90. How much does she owe? Go ahead, calculators. Don't just wait for me to give you all the answers, right? How much does she owe? Thank you. Somebody can talk to me today. Good. She's going to owe $2,344.42. See, for me, I would rather pay a little more in every paycheck than come down to the end of the year and find out I owe over $2,000 to the government. Yeah, that would hurt a little bit. All right, number 2, Anthony is an architect who also works part-time as a zookeeper. Information from his tax worksheet is wages from the architect job is over $78,000. Wages from the zookeeper job over $13,000. He has bank interest, $329, and stock dividends of over $500. What is Anthony's total gross income? So income's any money that he is making. So he had 2 jobs. Then he earned interest on his bank account. That's money given to him, and stock dividends. Which of those are earned income? Good. And which ones are unearned? Good, because he didn't actually go out and do anything for that. He just left his money sitting, right? So you have earned and unearned. So what do I have to do to figure out what his total income is? Add them up. So how much income does he have? So will they tax him on all of that? No. No. That is his total income, but that is not his taxable income. And we will talk about that. Okay? So yes, he made that much, but they're not going to tax him on all of that. Number 3, Noah is single with a taxable income for last year of $54,982.98. His employer withheld $12,875.93 in federal taxes. Use the tax tables booklet to determine Noah's tax. So go ahead and grab your tax booklet. It's got all those tax tables in it. When they give you taxable income, or once you find that, and I'll show you how to figure that out in a minute, that is the number that you look up in your tax booklet to figure out how much tax the government says that you owe. All right, so we're going to use your tax table booklet. You want to look up $54,982.98. Where would that fall? And it says that Noah is single. So you want to look up 54.9, where he's going to fall, and then single, how much tax does the government say that he owes? How much? 8,000 what? I disagree. It is 34. It should be 8,034. Do you see it? So this was from your tax booklet. Tax booklet's where you always go for the taxable income, okay? They're not taxing you on your gross income, they're taxing you on your taxable income. All right, so according to the tax tables booklet, that is what he should be paying in taxes. So does Noah get a refund? Yeah, it says his employer withheld over $12,000. So yeah, he does. So find the difference between Noah's tax and the amount withheld from his employer. What's the difference between the two? That's going to tell you how much of a refund he gets. So how much of a refund does he get? Is there anyone not understanding how to tell whether he's getting a refund or if he owes money? Okay. It's all depending on how much your employer withholds. And a lot of that depends on how you filled out that W-4 when you first got that job. So for those of you who are, as you get past, where you're making more than $12,000 a year, if you're doing your taxes and you're finding out by the end of the year that you're not, like you're owing money at the end of the year, you're going to want to go back to your employer and change how many you're claiming. Okay, if you're claiming 1, you may want to go back and claim 0. Okay, that way they take more out so you're not owing at the end of the year. Okay, so let's actually then try to file using the tax forms for somebody's taxes. Okay, Elizabeth Allison is a food editor for a magazine. She has received a W-2 form for her employer and a 1099 form from her savings bank. Elizabeth is filing her taxes as a single taxpayer. So she is single, so then when we go to look in that tax book, we need to remember she is single. So file her taxes. So we have her W-2 here. This is what comes from the government. And then this is a 1099. This is showing you, see it says interest income? That's her bank interest. Okay, you will get a 1099 form anytime that you have that unearned income. Okay, you always get one from wherever your unearned income is from, and it will tell you how much you've made. Okay, so let's go ahead and try to file. So I went ahead and put it on your papers as like one giant form. Actually, from the government, it's half of this. The part that I have at the bottom technically is on the back side. I believe it came from President Trump when he was like redoing all the tax stuff, made the comment that he was going to make taxes so simple they would fit on a postcard. So that's why part of it's on the front, and this bottom part technically would be on the back, because then it's postcard size. I'm annoyed by that, but whatever. All right. It just made a lot more schedules and other things to add to it later, just so he could say it fit on a note card. All right, so filling this out, notice the very top, it says filing status. We have all our options up there. What is she? Single. So go ahead and check mark or put an X, whatever, to notice that she is single. We got to mark what her filing status is. All right, so first name and initial. What was her name? Elizabeth. Last name? Allison. Do we have her social security number? Look at the W-2. Does it have on there what her social security number is? It's got all zeros on it? All right. We'll put all those zeros in, but you need your social security number. All right, it says your standard deduction. Someone can claim you as a dependent. You were born before January 2nd, 1954, or you are blind. If you were any of these things, you have to fill out, if you guys look at the back side of that paper, technically this is a separate form, but I put it on here just so you always have it. You would have to fill out this, okay? If someone can claim you, so like a lot of you guys, if your parents claim you on their taxes, you would have to fill out this part, okay? So if your parents claim you, you have to fill this out. Or if you were born before 1954, or if you are blind, this has to be filled out. Okay? It changes how much taxes they take from you. That's what that comes down to. All right, but for her, she's single. It did not say her parents claim her, so we don't have to worry about filling it out. All right. If it's a joint return, you'd put your spouse's name here. She is single, so we don't have to worry about that. Spouse standard deduction. The spouse is not being claimed as a dependent, anything like that. So we don't have a spouse, we don't have to worry about it. But if you have a spouse, you'd also have to look here to see if your spouse falls into this. All right, home address. Do we have her address? Should be on her W-2. You should have her address. So let's write that in. 6204 Lincoln Street. Philadelphia, Pennsylvania. 19144. All right, if you look over to the side, there's a few other things going on. You had place for your spouse's Social Security if you had a spouse, full year health care coverage, when you do this online, like they ask, like if you use TurboTax like I do, like they ask you all these questions, so you don't really notice you're filling out a form because they just kind of ask you questions, but you must have health care coverage for the year. Not exactly sure what happens if you don't, because I always have, but they do ask about that. Presidential election campaign, you can leave that blank. If more than 4 dependents, you'd have to check there, and then you'd have to do another form. Yay, another schedule you have to fill out if you have more than 4. But she's single, so we don't have to worry about it. Then you'd have a spot for dependents. So in other words, like for me, this is where my kids go, listing my kids, their social security numbers, the relationship to me, and then checking if they get the child tax credit or not. And we'll talk about that in a minute. And then there's a place for you to sign. So let's go ahead and all forge Elizabeth's signature here. Don't write your name. It's not your tax return. And what's today, the 25th? Yes, 2/25. All right, and then paid prepared down here at the bottom. If you go to an actual tax person that does it for you, then they would fill out this bottom part because they're responsible for it because you're paying them to do your taxes. So they would fill out the bottom. All right, so the first part, or the front part of that note card, per se, is all just personal info. That's all that is. So then, like, it would be the back side of the note card, or the bottom of this page, because the way I copied it. This is where all that info comes in then. So, line 1. We'll just kind of go one line at a time, let you see kind of what's important, and then what we really will kind of glaze over. So 1, wages, salaries, tips, etc. Attach form W-2. So in other words, look at her W-2. Which box gives you what her wages were? Box 1. Okay, so this is always going to come from box 1 on that W-2, right? It will always come from box 1. And her box 1 tells us that she made $83,600. So 83,600. All right, and then if you look, we have 2A through 5A. This is the place where this is all unearned income goes. Will everyone always have unearned income? No. So you have to kind of look based on what scenario I've given to you and who they are, whether they have it or not. Does she have any unearned income? Yes. She was given, she has a 1099. She has bank interest. Where does bank interest go? Which number? 2, 3, 4, or 5? 2. 2A, 2B, if you kind of look across here, is all taxable interest. For our purposes, we will never use that box right there. Okay, we're not going to get that nitpicky. There are so many things I could talk to you about for taxes. I'm trying to get the basics to you so you understand basics of filing. Okay, for our purposes, we will never use that box. But she does have interest, which goes on line 2, and the bank interest at $956. Did she have any dividends, any stock dividends? No. Think I'll give you some that have stock dividends? Yep, sure will. Number 4, IRAs, pensions, or annuities. They didn't give you anything there. I may not on that one. And then line 5, Social Security benefits. Did she receive money from Social Security? We did not talk about that one. I got nothing. Line 6, total income. Add lines 1 through 5. Add any amount from Schedule 1, line 22. I'm not doing all the crazy schedules with you, okay? We're just going to try to keep this as simple as possible. So add lines 1 through 5. So we just need to add her income plus her unearned from the bank interest. And that's what goes on line 6, which will be $84,556. And all we did is we just added. All right, line 7 says adjusted gross income. If you have no adjustments to income, enter the amount from line 6. Otherwise, subtract Schedule 1, line 36 from line 6. See, they should say this made this so much easier. No, they didn't. I'm not going to give you anything ever on that line. So we're just going to keep that 84,556. We're going to keep this as simple as possible just so you get the basic gist of how taxes are done. All right, line 8. Now notice 8 opens to this box over here on the side. Okay? This is where you get what is called your standard deduction. This is what changed drastically from last year. Okay? Standard deduction or itemized deductions, if you use Schedule A, is going to be falling right here. So we have single or married filing separately would get $12,000. Married filing jointly or qualifying widower, $24,000. Head of household, $18,000. And if you checked any box under standard deduction, see instructions. So obviously, I'm not taking the hard road with you guys. So where does she fall? She was single. So for her, it's $12,000. So on this, for line 8, we're going to write $12,000. Line 9, qualified business income deduction. I'm not giving you anything about businesses. We can leave that one blank. And then here we go, line 10, taxable income. Taxable income. This is what we are using to find out your taxes. It says subtract lines 8 and 9 from line 7. If 0 or less, enter 0. So all we're doing is taking how much money she made and subtracting off the standard deduction. Right. All right, so subtract that off, we get 72,556. So when I talk to you guys that we have your income and then we have taxable income, the government allows you to subtract a certain amount of income from how much you make, and then you look up that number in your tax booklet. So we're not looking up 84,000 in the tax booklet for taxes. We're going to look up 72,000. Does that make sense? The government allows you to subtract a certain amount off depending on how you file. Like for me personally, I'm married, so I can subtract 24,000 from mine. Now here's where the government screwed me from taxes last year to taxes this year. We itemize our deductions last year. So the standard last year was like half this amount. It was a lot less. So last year they itemized, meaning like the interest I pay on my mortgage, different things that we pay for, like all this different stuff added up. So you could like total all this stuff that you've paid for the year. And I had almost 24,000 in deductions last year, just for me itemizing. So then I got this, my deductions for that, which was about that much, about this, close to that. And then last year they also gave you exemptions. You multiplied how many people were in your family, which there are 5 of us, times 4,050. So we got over $20,000 in additional deductions that also subtracted from that number. They got rid of exemptions this year. So what's happened is, since last year we itemized, we were pretty close to the same amount. They're actually taxing me on over $20,000 more income this year than they did last year. That is why I got screwed over in this process. Does that make sense? They were subtracting off another $20,000 last year. Exemptions are gone, which really stinks. So, but they did like almost double all of these. So if you didn't itemize, people are making out like crazy. Like if they just took the standard last year, that standard now is like twice as much, so they're subtracting that much more off their income. All right, so line 11, here we go. When it says tax, this is where you look in your booklet. Right, taxable income, look in your booklet. So open up your tax booklet and we're going to look up 72,556, and she is single, so we want to look in the single column. And how much does it say then that she should be paying in tax? So look in your booklets. That is what you should get. Double check, make sure we're okay, but you should get 11,906. If we're not good at reading that tax booklet, we're going to have troubles. What happens if you mess up just one line of this tax form? You messed everything up. Yes, we got to make sure we know how all these numbers are, where they're coming from. So when it says tax, you look at your booklet. Okay? All right, line 12, child tax credit or credit for other dependents. We will talk about that more in just a little bit. She does not have any children or anything like that, so she's got nothing here. 13, subtract line 12 from line 11. All right, she didn't have anything, so hers didn't change. 11,906. 14, other taxes. Do you think I'm ever going to give you that? No. Again, I'm trying to keep this easy. We're not going to have any of that weird stuff going on. Line 15, total tax. Add lines 13 and 14. Okay, so 11,906. Line 16, federal income tax withheld from forms W-2 and 1099. So look back at your forms. Okay, what box on those forms that I gave you does that info come from? Box 2. Okay, so look back at box 2. How much was withheld? Good. So we're going to write that one down, 15,884. $17, refundable credits. Do you think I'm going to give you that? No. That's a lot of crazy forms going on there. We're not messing with any of that stuff. Line 18, add lines 16 and 17. These are your total payments. So 15,884. And here we go. So now we're down to the part that says refund or amount you owe. So line 19, if line 18 is more than line 15, is 18 more than 15? Yes. So then I'm following here. Subtract line 15 from line 18. This is the amount that you overpaid. So we just want to subtract then line 15 from line 18. So 15,884 minus 11,906. How much did she overpay? Good. $3,978. And then line 20A, amount of line 19 that you want refunded to you. This box cracks me up. I would like all of it, please. Thank you. So 3,978. I was laughing at this when I was working through all this stuff this weekend, and I asked my dad, I'm like, why would anybody not, why is that line on there? And he's like, well, some people take their refunds and they'll put it towards next year. Like if they know something's going on the next year, like they want to make sure they're covered, that they don't have to end up owing next year, they may take that and put it towards the next year's taxes. So some people do that. But I laughed though, because down here at line 22, amount that you owe, subtract line 18 from line 15, right? But then below there, it doesn't say how much do you want to pay, right? Here's how much I should be refunded. How much do you want coming back to you? But here's how much you owe, but they don't ask me how much I want to pay. Just thought that was funny. Sorry, slightest things amuse me. All right, so what are we thinking about a basic tax form? I know there's a lot on there, but is it bad? Nah, it's not too bad. All right, and there's that other backside. We'll talk about that more tomorrow. All right, so one of the things that I think students don't always have a good rationale on is the difference between a tax deduction versus a tax credit. So tax deduction, that was the thing that we wrote in there that we were single, so it was 12,000, right? So tax deductions and tax credits are used to reduce your taxes. So they're things that you can use to your advantage to make sure that you're trying to pay less in taxes. So all tax deductions and tax credits are subject to certain limitations and restrictions. If you use a rule to your advantage to lower your tax burden, you are not breaking any laws. It is called tax avoidance. I'm going to tell you right now, on your test over this chapter, you will have a vocab section. There is a lot of vocabulary in this chapter. Okay, so using all of these, like the tax deductions for single, married filing jointly, head of household, all things like that, tax credits, which we'll talk about in just a minute. Like, that's called tax avoidance. You're using them, it's legal to try to pay less taxes. But if you lie about items on your tax return, you're committing tax evasion, which is a crime. Tax avoidance is a good thing, it's legal. Tax evasion is a crime. Yes. That would be stupid. I wouldn't consider that tax evasion because you're not ripping the government off. But if you're single and you file that you're married filing jointly, that to me then is tax evasion because you're using it incorrectly to have to pay less taxes. If you do it the other way, you're just dumb. You're giving them more of your money. Does that make sense? Okay. All right. This I thought was a great thing where you can kind of see the difference here between a tax deduction versus a tax credit. So would you rather have a $10,000 tax deduction or a $10,000 tax credit? You're like, it's $10,000, does it really matter? Yes, it does. So a tax deduction, AGI stands for your annual gross income. That's what AGI stands for. So if your annual gross income, let's say you made $100,000, okay, a tax deduction comes off of how much money you made. Okay, tax deduction subtracts from income. So it would get down to 90,000, and then I would, tax rate's kind of a moot point at this point. But then this is what I would look up in my tax booklet. So this would come from tax booklet. Okay, so tax deduction subtracts from your income. So instead of $100,000, it gets it down to 90. So this is what I would look up in tax booklet. I'd look up 90,000. It would tell me that I would be paying then $22,500 in taxes. That's how much I would have to pay. Okay? Or a tax credit, I still have my 100,000, so I would look up in tax booklet 100,000. Which is going to give me 25,000, so that's more. But then a tax credit subtracts from your taxes. Tax credits subtract from taxes owed. So then I would actually only owe $15,000 in taxes. So would you rather have deductions or credits? Credits. Yes, credits are much better. Because deductions come off of here's how much I made, they subtract it. Okay, so it changes the number I look up in the tax booklet. And then that's the taxes I pay. Whereas if you have a tax credit, I look up how much money I owe in taxes, and then I subtract it off of that amount. That's a better thing. Or, like me, I have both. I subtract the $24,000 since I'm married from how much I owe, or from my income, look up that number, and then I have kids. And we're going to talk about that. I get a tax credit for my kids. So then it subtracts off of how much taxes I owe. So I actually have both. All right, so Schedule A, well, we're going to talk about it just so you can know what it is, but we're not going to actually do them for this class, okay? Schedule A is where you can itemize, allows you to list deductions that are not part of that 1040 form. So like if you have a lot of medical expenses that you've paid out of pocket, if your insurance covered them, that doesn't count. It's stuff that you've paid for out of pocket. Property taxes paid, right? If you own your own home, you pay property taxes. State and local income taxes paid. Casualty and theft losses. So let's say your house was broken into, was robbed, and you lost there. Or your house caught on fire and you had to pay money for that. Mortgage interest paid. Again, if you own your own home, you pay interest on your mortgage. And any charitable contributions. So last year, I had pretty much a lot of all of that stuff. So that's where all that added up allowed me to get up to almost 24,000 in itemized deductions. But now, since they changed it, over 80% of people will not itemize. They'll just take the standard. And I went through just in case and put all my stuff in this year to see if what I had was more than the 24,000 that was standard for me, and it wasn't. So for me, it was just easier to take the 24,000 standard and be done. A lot less paperwork for the government to even have to look at. And then again, just so you have the numbers here, if you're single or married filing separately, it's 12,000 is standard. Married filing jointly is 24,000, and then head of household would be 18,000. So that's standard deduction means you don't have to do anything else other than go, yep, I'm single, subtract 12,000 off your income. Okay, that's what the government allows. Now, granted, if you have a lot of medical expenses and property taxes and you lost a lot, you may be more than that if you itemized. But 80% of people anymore for this country will not itemize anymore. All right, tax credits. So a tax credit is an amount you subtract from your tax, what we just talked about, after you look it up in the tax table. Deductions are subtracted from your income before. One other thing, we're not going to talk much about here, but just so you're aware, you can get tax credits, which we said we like better, for things like green purchases. So if you purchase, like a volt. What's a volt? It's what? Not a vault, a volt. A Chevy Volt? Yes. What's a Chevy Volt?
Yeah, it's like a Prius.
Yeah, it's kind of like a Prius. Yeah. Yeah, my dad and both of my brothers, they all own Volts. It's weird. All three of them. Yeah, they can plug them in, right? They don't use gas. But yeah, if you buy like a Prius or whatever, like if you have a green purchase, something that helps save the environment, okay, you can get tax credits for that. Even if you buy like energy efficient appliances, like if you redo like your kitchen, things in your house, put in solar panels on your house, stuff like that, you can get tax credits for that, which we like because that subtracts off of how much tax I owe. And then education and retirement investments, if you're going to school, you can get credits for that as well. That'll subtract off of how much tax that you have to pay. Lonnie? Charity and stuff falls underneath itemized deductions. So unless you have enough to be more than that standard deduction, it doesn't help you anymore. And that worries me a little bit, whether that will make people not give as much to charity if they're not going to itemize. That worries me a little bit. But a lot of people do that. I know. But the big one that we will actually talk about is a child tax credit. Tax credits of $2,000 per child dependent and $500 per non-child dependent. So like if your parents, like they're older and you take care of them. But we will talk about the $2,000 per child. That's a credit that you get. So I have 3 kids. So how much do I get in tax credits? $6,000. So I figure out, look in that tax booklet, how much taxes I owe. I subtract $6,000 from that. That's how much I owe because I have 3 kids. All right, the credit starts to phase out at an adjusted gross income of $200,000 for single and $400,000 for joint. We're not even going to worry about that because let's be honest. How many people do you know make over 200 grand a year by themselves? I mean, if you know somebody, that's awesome. So if you make over $200,000 a year by yourself, you don't get this credit anymore. If you and your spouse together make over $400,000, you don't get that credit. You make a lot of money. You don't need a credit, okay? But for us, everything we deal with will be underneath those numbers because realistically, most people make less than that, okay? All right, some other popular tax credits. So we just talked about, there was the child one. There's also child care tax credit. If you pay a daycare center, babysitter, summer camp, or other care provider to care for your child, then you can get a credit for that as well, okay? And then earned income credit, a tax credit for working people with low to moderate income. If your adjusted gross income is less than $55,000, and that's for single, then you may qualify for another tax credit because you don't make much, okay? Qualification also depends on the number of kids you have, your marital status, and how much you make. So all that kind of figures in together. We won't do any of that on our tax returns, but just so you know, that is out there. Okay, number 5. We're going to do one other tax return, just so you can kind of see one other part of all this. Kenya and Robin Omar are married with one child. Kenya is a pharmacist and Robin is a store manager. Their W-2s are shown. They received $987 in interest on bank deposits and $1,200 in stock dividends. Do the Omars get a refund or owe the government? In either case, determine that amount. All right, so we're going to go ahead, we're going to file their taxes for them. All right, if you need to pull your notes apart, you can, because I know that's on the next page if it's easier for you. All right, so let's go through. Maybe we can go a little faster this time than we did last time. Filing status. Where are they going to be? Married, filing jointly. All right, so make sure you check that box. All right, first name. First we have Kenya. And his last name is Omar. Kenya Omar. Social Security number. We got all zeros again. All right, can someone claim Kenya? Is he a child? No, he's not the child. So if a joint return, your spouse's name. Yes, we have the spouse this time. And the spouse is Robin Omar. And just gave zeros again for Social Security. They're not always all zeros, just on this examples they are. And the spouses, she's not blind, she's not any of that stuff, so don't have to worry about that. All right, home address. Do we have that? Yep. 14 Rachel Drive. Walnut Creek, Ohio. Four 684. And then dependents. I just said one child. It didn't say his name. What do you want to call him? What? What do you want to name the kid? I didn't say his name, so we'll get creative. James? I heard James. His name is James. James Omar. There we go. I'm going to assume his Social Security is all zeros as well. And then, will they qualify for the child tax credit? Yes. They don't make over $400,000 combined. Right? For our purposes in this class, every time they have a child, they will qualify. Okay? I won't give you any where they make too much and then they don't qualify. All right, so down here for signing purposes, so your signature, this would be, Kenya would be first. And then spouse signature, was it Robin? Robin Omar. And today is the 25th. All right, so now let's actually get into the nitty-gritty of all of their stuff, okay? So, line 1, wages, salaries, tips, etc. What box did that come from? Box 1. Now, when they have 2 W-2s, what do I have to do with those numbers? You have to add them. Now, the other thing here, do you remember what it said about what the government allows you to do when you're putting their values on here? Do we use change? No, we don't. So, for looking at Robin's is $65,120.97. So I should round that to 121. I'm just going to show my work here so you guys can see it. So 65,121 plus Kenya's 52,126.76. We have to round up to 127. So 52,127. So round them first, and then we'll go ahead and add them together. Yes. So their income would be what? Say it again. Good. 117,248. All right, line 2. Did they have any interest? Bank interest. Yeah, I didn't give you the 1099, but I gave it to you just written out. They had $987. Line 3, dividends. Did they have any stock dividends? Yep, they had 1,200. Again, sometimes I'll actually give you the forms. Sometimes I'll just give it to you written out. Just kind of depends. Did they have any IRA, pensions, annuities, Social Security? Nope, there's nothing there. Line 6, total income. Add lines 1 through 5. Okay, so we'll just add all those up. You get 119,435. Line 7, adjusted gross income. Will I ever give you that? I will not ever give that to you, so we're just going to rewrite it. 119,435. Yeah. Line 8, again, notice that box opens up over here. I can't tell you last year how many people did not see that line opened up to the giant bubble. Okay, where does they fall? They're married filing jointly. It's going to be the 24,000. So what's going to happen with that 24,000? It's going to get subtracted off of that, right? The standard deductions come off of your income. So line 9, qualified business, I'm never going to give that to you, so we don't have to worry about that. So line 10, taxable income. This is what we were looking for before we can look up in the tax book. Subtract lines 8 and 9 from line 7. Okay, so we'll subtract. We get 95,435. Line 11 says tax. Where do I look? This is your booklet. So look in your tax booklet for 95,435, and then you have to look under married filing jointly column. So take a minute, go ahead and look that up and see where we're at. Ooh, no. All right, what are we getting? Yes, should be 12,873. Did you find that? Oh yeah, yeah. You got to look under the right column. That helps. All right, anyone not able to find that? Okay. All right, child tax credit. Ooh, they had kids. How many kids did they have? How much did they get per kid? 2,000. So right in here, I would go ahead and write that in. They get $2,000 per kid, and they only had one, so it's 2,000. So we'll write that over here, 2,000. Line 13, subtract line 12 from line 11. So instead of owing over 12,000 in taxes, now they only owe 10,873. We like tax credits. They subtract off of how much tax I actually have to pay the government. Line 14, other taxes? Nope. So then line 15, your total tax, 10,873. All right, line 16, your federal income tax withheld. Where do I look? Box 2. All right, by looking at box 2, do I round these as well? Yes, we do round those. So like Robin's is 0.99. So hers is going to round up to 8,766. And you're going to have to add to that Kenya's will also round up 6,199 because his was 0.65 for the change. Okay, you guys okay with that? We always round to the nearest dollar or round down, whichever way it goes. All right, so together, what goes in line 16 when we add them together? 14,965. Line 17, I'm never going to give you anything right there, so don't have to worry about that. So line 18 is still just $14,965. So line 19 asks if line 18 is more than line 15. Is 18 more than line 15? Yeah, so that means they overpaid. So subtract those. And we get $4,092. How much do you think they want back? All of it. So $4,092. Whew. What are we doing? You all right? Are we good? Yeah, I'm sorry. Taxes aren't the most exciting thing. So, do we want tax credits or tax deductions? Which help us more? Credits. Can I have both? Yeah, you sure can. They had both, right? They had $24,000 for being married, filing jointly, and then they got another $2,000 in a credit because they had a kid. Okay, so we like that.